So my pair that I've been watching over the past 2 days this week is GBP USD. And
Hmm.
I'm gonna give you my breakdown, my analysis to just how I've taken entries on this pair. So
Okay.
first off, at the beginning of the week, I always start off on my weekly time frame. So I get my overall structure and I get my support or resistance. I get if we're in a trend. I get all those details in order to see where we're going in the market. So as you can see, I have a purple level of resistance. The market is at a level of resistance right now. The overall trend is in a downtrend because I have my first lower low. I broke structure up here, first lower high, lower low, lower high, and the market is just respecting this high point. The market is respecting this level of resistance. And as you can see, for the past since September 2000, no, since July 2018, the market has respected this level of resistance. So this is a key level of resistance in the market that we're paying attention to right now. So as you can see, the market is forming higher lows in this basically downtrend. So that
Yeah.
shows buyers want to step in the market and they want to push the market up, but they can't push the market up simply because we're at a level of resistance
Yeah.
that's strong. It's holding it down. So
Yeah.
with me seeing that we're at that level of resistance and how we closed last week, we closed with basically this is a tweezer top. This is a tweezer top right here because we closed bullish 2 weeks ago. Then we opened bearish and closed. We opened bearish and closed bearish. So right here where I have that level of this box is a tweezer
Yeah.
top. Usually people base tweezer tops off of like things like this, off these wicks.
Okay.
But what I've been studying is basically a tweezer top is as long as the open of this, the close of this bullish candle and the open of
Then
the
of the
bearish candle
bearish.
is equal. As long as
Mhm.
it's equal. And as you can see right here, this is a tweezer top also because it's equal.
Right.
Only difference is it has wicks at the top. So me seeing that with my confirmation last week, we closed below my estimate EMA, and then we end up getting a crossover. I'm dropping down to my lower time frame to see what potential setups or sales can I take in order for me to be able to take advantage of this market. So, like I said, we know our overall trend on the weekly. We're in a downtrend,
Hmm.
but we're stuck at this level of resistance right here. And we know, even though we see all this choppy, all everything that's choppy right here, we know this is only wicks on that daily time frame. You see what I'm saying?
Yeah.
This was never broken. So we paying attention to structure, and we know our overall structure from the weekly time frame. We doing top down analysis. So we
Hmm.
going from the weekly. I base my overall setups off of the 4 hour time frame. So with me being a price action trader, I have to go from my weekly time frame to my daily time frame to see what's going on with my 4 hour time frame. So as you can see from my daily, we form higher highs, higher lows, higher highs, higher lows. A
Hmm.
high, this level of resistance up here could not be broken. A higher low, and as you guys can see, this red level of support right here that was holding as a whole as a that was holding as a higher low was broken. So structure was broken. We have a new lower low, and we're at our first lower high at this level of resistance, which could not get broken from that weekly time frame. So we know our overall structure is a downtrend. We know back on our daily time frame, we have a break of structure and we're at another lower high point. We have a bullish Harami pattern. And I say this is a Harami pattern simply because we have a bullish push up. And then that second candle looks like a little baby, like a pregnant woman. Basically, it,
Okay.
it looks kind of like a pregnant woman. So
Right.
as you can see, I'll drop to my 4 hour to try and get my overall, my analysis. So as you can see on my 4 hour time frame, structure was also broken on my 4 hour time frame. So at this level of resistance right here, which was a higher low point, we had a break, which was a lower low. My first lower high point, lower low. We're at this lower low, this black level of support. And
Mm-hmm.
our lower high is at this level of resistance, which is a 4-hour based resistance from my green indecision, from this green support and resistance level. That's my level of resistance. And as you guys can see, we were getting a lot of rejection. We were getting a lot of rejection right here.
Yeah.
A lot of rejection. And when I'm saying this rejection, is I'm saying off of these long wicks. These long wicks are showing that, buyers try to flex their muscles and push the market up. But sellers step back in and close the market below this level of resistance in order to respect this level of resistance. So what I was paying attention to and what I got into details in is that we got to close with no wick at the bottom of this bearish candle after we respected that level of resistance. On top of this is a long rejection candle. It closed as a doji, but it's a long rejection candle. So what I would consider that is a pin bar. So I could have took my entry at the close of that pin bar, seeing that I had rejection from that level of resistance. I could have took entry right there. And me, I'm the type of person I want to go off of more confirmations. The more confirmations, the better confidence I have to take that setup. So with me, going off of how I trade, I'm going to wait for this setup. And as I break down all the time, if I mark out this pin bar right here, we will have a bearish engulfing at a level of resistance. But the reason I'm not marking off this pin bar is because it's showing a lot of exhaustion. It's showing a lot of exhaustion from the upside, saying that buyers couldn't push the market up, sellers step back in. So being at that level of resistance, I'll be on my lower time frames trying to find the entry. So and my stop loss would more likely been above this high point if I would have took entry off that pin bar. So
the cats keeps
as the market is it's moving. You see the market trying to come back up. Can y'all mute y'all mics? 1 second. I got it. Okay. As you guys can see, the market formed like a double top pattern, and it tried to break that level of resistance one more time, which it couldn't, and we formed a big volatile, very volatile bearish engulfing candle, and we dropped down to a level of support that we found. So once we found this level of support, what I'm looking for now is either, this is my impulse move. Now I'm waiting on the retrace. As I see that the market end up coming back to test this low point of this candle right here as a level of resistance, and me being on a lower time frame, it was respecting that level of resistance. This retrace, it was respecting it simply because it was forming, bullish engulfing patterns, exhaustion wicks. So how I took a setup last night was I was paying attention to basically, this bullish engulfing pattern before any of this happened over here to the right. Paying attention to this bullish engulfing pattern, and once you when you're paying attention to these bullish engulfing patterns on the lower time frame, they're breaking structure. So what I seen was a pin bar. What caught my attention was a pin bar. Basically, when you get a bearish engulfing or bullish engulfing, it's saying buyers or sellers are taking over the market. They're stepping back in. They're taking control of the market. So that was one confirmation. I'm at a level of resistance. That's 2 confirmations. I'm in an overall downtrend. That's 3 confirmations. And, going to the lower time frame to try to take a setup or entry, I already have enough confirmations, and I have no reason to, question myself on why I should take basically a setup. I end up taking my setup off. 1 second. I know I got in a little late. I end up getting in 105, 1.295. Okay. So I know right here on this lower time frame, I got to break a structure. I was on the lower one. I did 15. Okay, this is where I was at. On the lower time frame, this was my higher low point. And once I got a break of this higher low point, and I ended up getting in. Good morning. I end up getting in on this bearish candle right here simply because I already knew I'm already at a lower high point, on the 1 hour time frame. And I got in a little late, but it really didn't make a difference to me simply because I knew my overall momentum and I knew where the market was going. I knew where I was projecting the market to go. I had overall bearish bias. I wasn't looking for any, buys. I may have caught, I went automatically into profit. I went to sleep probably about 2 hours or so, and it did all this over here. But as you can see, I was 40 pips in profit, and I got out at this bearish engulfing. But I took a couple more setups. On this little this minor trend because I know my overall bias. I know where I'm at in the market. So I believe once I got another break of structure, I took entry at this bearish engulfing right here. I take entry at this bearish engulfing pattern right here to take down to the downside. And as you can see, you always have to have a exit strategy and you always have to have an entry strategy. So looking at the market right now from the 5-minute time frame, the market is rejecting some level of resistance. So what I'm gonna pay attention to is to take another setup because my overall projection is 1.28946. That's my overall projection based off of the weekly time frame. And as you can see, it's a lot of volatility in the market. So, that's not gonna be hard to reach. This is not gonna be hard to reach at all. It's just a patience game. You gotta be patient. So, with seeing those exhaustion wicks from the lower time frame, what I'll go back to the higher time frame and do is pay attention to these candle patterns that's forming. This right here is a bullish harami. As I mentioned on one of the higher time frames, we have the big bullish candle, and then we have basically you could say the baby. So you could say you have the mom and you can have the baby. It looks like a pregnant lady. So the way I'm taking these setups is, I can even take this setup as a reversal pattern, or I can take this setup as a continuation pattern, all depending on, where we're at in the market. Right now, we're at a level of support. So I just need a little bit more confirmation off of this close of this candle that actually just opened up to see, are we going to push the market up or are we going to get a break for that level of support? So that's my bias for GBP USD. I'm in the overall sales. I have overall bears in the market. I don't see why we will be buying. Individuals could probably, do some counter trend trading, but overall bias, as you guys can see, and y'all can agree on, is that we have overall sellers in the market. And as you can see, we showing a lot of exhaustion, bearish pin bar, a lot of exhaustion, cross to the SMA EMA, rejection of level of resistance, bullish, bearish volatility in the market. So, you just got to get into details and pay attention to the details that the market is giving you, and then go from there. So y'all can unmute y'all mics, and if y'all have any questions, let's get them rolling.
Do you ever use the line chart to help you make some of those lines?
I use my line chart. I use my line chart to get started with my levels of support and resistance. And just name a pair. Just name a pair, and I'll type it in, and I'll do my markups on it.
Let me see. I was gonna say GJ, but I want to see if there's something else.
GBP, JPY.
You use the line chart to do your support and resistance on the daily and the 4 hour or the 1 hour too.
I use my line chart to do my support and resistance from my monthly to my weekly to my daily to my 4 hour.
And then wicks on the 1 hour.
I sometimes do the wicks, bro. It all depends. It really depends on what you looking for, bro. I'm saying, like you could do the wicks off of just depending on where you're at in the market. But most of the times I'll go off the candle close of the body. That's how I base my level of support and resistance off of my 1 hour. Like as you can see right here, I can do a level of resistance right here off of the closes of these candles, because you got to understand, whenever you get a bullish candle and then you get a bearish candle, the market has found some type of resistance. And the resistance, the support and resistance points, these matter so much on the higher time frames because they're more volatile. You know, when you get these levels of support and resistance on the M15 and M5, they can break easily. But when you got a level of support and resistance that's gonna hold, as you can see, this weekly time frame, it took so many touches. My weekly levels of support and resistance are purple. With us being on this daily time frame, y'all guys can see that it took so much strength. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 candles, like 16 touches before it even, actually broke. And that's off the weekly level of resistance. You get that? Y'all understand?
Yeah.
So it's all really based off of, where you're at in the market and, what you're looking for in the market at the same time. So with me, how I use my line charts, this is how I use my line charts. We're price action traders. We're not, some traders based, they're trading strictly off of news, and some, for just fundamental. Me and, with me teaching y'all, we go directly off of price action and, candlestick analysis. So paying attention to details. I don't have, a lot of support and resistance levels from this monthly time frame, and I'm not gonna try to make a lot of support and resistance levels. So I'm just gonna see to where I'm at currently in the market. So I see that the market is directing down. This is how I do my support and resistance levels. Usually I base it off of 1 point, which is the market found a level of support right here, and then it broke and found a level of resistance right here. That's how I usually do it, but it's kind of choppy right now. GBP JPY is very choppy. So what I'll do, I'm gonna go off the candle closes. And remember how I just said, Denver, basically it depends on, what condition you're in the market.
Right.
Where I just had to do that. I could base another level of basically monthly support off of, because you're not gonna get those good you're not gonna get actually, just a perfect
Yeah, because it's on the monthly.
distance level on, the line chart. Sometimes you gotta base it off of the close or, where the market was. So me seeing that the market formed a level of resistance and it respected this level right here, I'm gonna put a level of resistance right there. So I found my main key levels of support and resistance, which is right here. And I found these key levels off of, this bullish pattern, this bullish candle, and then this bearish candle closing, which was basically like a tweezer.
Showing resistance.
The market found resistance, then we pushed down, and as you can see, we found a bearish candle, and then a bullish candle. The market respected, and when you look to your left, we have confirmations that these are levels of support and resistance. So popping down to my weekly time frame, and we're still, the main question was, how do I use my line charts? I use my line charts to find support and resistance. I don't trade off of, line charts. So for me right here will be, a key level for me, simply because I see right here, the market found resistance and the market broke that level of resistance and it found that level of support. It was bouncing off of this level of support 1, 2, 3 times before it broke. So, and I do color coding, support and resistance. So I know my weekly time frame is my purple. I know my black is my monthly, and etc. So I see I have I have the market broke this level, which was support. Now this is a level of resistance. So my focus right now would be, right here, Denver, how I would use my wicks to my advantage. I see the wicks came down to this low point right here, and I know for a fact we're on a weekly time frame, bro. The market's either gonna, it's gonna bounce off of it or it's gonna break it. But being off the weekly time frame, you can see that the current wick that we're currently in, the current candle that we're currently in is, it's bouncing off of it. So I'm gonna drop to the lower time frame to show you what it's doing. The market came down. Boom. The market came down and it bounced right off of it. You see what I'm saying?
Right.
always base your, support and resistance levels off these higher time frames, off these the monthly, the weekly, and the daily, simply because, you
They're
take
stronger.
they're stronger. You're basing your overall analysis. You want to base your overall analysis off of, the 4 hour time frame. That's what you want to trade off of, but you want to know your trend. You want to know if the market is ranging. You want to know if the market is choppy from the higher time frames, from the weekly time frame, from the daily time frame. You get that?
Right.
So, that's how I do it. So with me being at my daily level, and I'm just finding key levels. As you guys can see, my chart is pretty clean right now. I don't have too many lines everywhere. I'm just finding my key levels because, the key levels is the ones that really matter. So boom, right here. I'm even not even having to use my line chart. I'm using, market structure. I'm using candle patterns. These candle patterns, look right here to your left. Always look to your left. I got a bearish, then I got a bullish. The market found a level of support right here. We broke, boom. I got a bullish, then I got a bearish. The market was showing exhaustion. It respected it. It pushed down, but it came back down to this level of support, which is my weekly support, and it shot It shot right up. Then it backdoor. We back at a level of resistance from my monthly time frame. As soon as it touched that, it's showing rejection, 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 drop. Like it's all there. You just have to get into details with what you're looking for. You know what I'm saying? And
Right.
it takes time. It takes time. I'm not gonna say, I'm going over certain things and y'all gonna just automatically become beasts. No, it takes time, because I had to learn certain things the hard way from taking losses, etc. So I say just keep going, keep practicing what we going over, and then use it to your advantage.
When would be a time that you would pull out your fibs?
I will pull out my fibs whenever I get like a break of structure, or the market moves off of. It has two type of moves. The market has impulse moves and the market has retracements. I'm pulling out my fibs at retracement levels. So pay attention right here. So right here, peep, I got a impulse move right here, push up, retracement. So what I'll be doing right here is pulling my fibs out to measure this retracement. But you gotta also know your trend, know the trend that you're in. So as you can see right here, I got a 38.2 respect, and that 38.2 respect is lining up directly with my weekly level of support in order to take the market up to the upside. So I got another impulse move right here. I got another push up. And how I do my Fibonacci retracement, I don't consider a 23.6 or 50%. I don't consider those price reversal zones. I consider those consolidation and continuation zones. So I'm basing my Fibonacci's basically off of 38.2, 61.8, which is the golden ratio, 78.6 and 88.6. If the market touches my 100% level, that's a highly volatile setup where I can risk it all. Not risk it all because you never want to risk it all, but you're gonna take a higher risk if you got a higher retracement, simply because the market is gonna drop back down. As long as you have to have confirmations in order to do certain setups like that. You see what I'm saying?
And when you have the high retracements, your stop loss is closer also.
Exactly. So look, pay attention right here. What I'm gonna draw my fibs. I'm drawing my fibs off this impulse move, push up. I'm measuring this retracement right here. None of this is here yet. I'm just measuring this retracement where the market actually found a level of support at that weekly level of support. And as you guys can see, all my support and resistance levels, they're lining up directly with my Fibonacci retracement levels. So if I'm setting my say I get a push down to 88.6, I can set my stop loss at 100%, as long as I got the confirmation that the market is gonna go up. Always have confirmations before you take an entry on anything. You see, so if I get 100% retracement, I can base my fibs off of the 110. I can base it off the 120. But it's a little different when you at like a 38.2. You can't base your 38.2 retracement and then try and put no 110 stop loss. That shit gonna be you gonna have that's 5. You know what I mean?
Yeah.
And then it comes back to the point. I wouldn't even be trying to look for no buys simply because I know I'm at a monthly level of resistance. Let's keep rejecting. Pay attention to to what the market is telling you, showing you. You know what I'm saying? We getting rejection. Bullish candle, boom, push down. Rejection, come back up. The market is giving too much rejection for me to even be looking for some type of buys going back into, to break past that monthly level of resistance. Like I said when we first got on, the monthly, weekly, and daily, those are the most volatile, support and resistance points that, as soon as the market hits it, we don't even need Fibonacci. We don't even need support and resistance points on, the 1 hour and, the 15-minute. It's cool to put those on there. It's cool.
Yeah, but they're noisy and they'll throw your head
I still
off.
do it, but them hoes will throw you off. And then
Right.
you're looking crazy. Always base your analysis off your your higher time frames.
I used to have a problem doing that.
Doing what?
Paying attention to the lower time frames too much, but it was too noisy. So it's like I wasn't really like.
Always base your analysis off the higher time frames.
Right.
We are price action traders. We not, we can't get in the market, catch 10 pips, 20 pips, but we want to catch them big moves. You feel what I'm saying?
Yeah.
We want to catch a lot of pips. We not in here just to be playing games and just we're not here for that. So as you guys can see, my eyes are on GBP USD, and we're in a highly volatile market right now for sellers to be in. I'm gonna do a quick breakdown on GBP USD again, just showing my confirmations of what I have. As you can see right here, the market found a level of support. That level of support was broken, and this was a higher low point. So I got a first lower low. I got my lower high. The market was giving off rejection at this level of resistance right here. So I know my overall structure right now is basically I have sellers in the market. I'm going bearish. I'm looking for sales. So I have a lower low, and as you can see, we came back up to this level of resistance, which is a new high point. This level of this lower high point was never broken. It was not broken, so we still look for sales. Paying attention to how we got a close of basically, last week. The close of last week, we had basically a tweezer top right here. And a tweezer top is, these two candles closed evenly. My close for my this bullish candle was at that level of resistance, and my open and close respected, and it was even to that level of resistance on this weekly time frame. So I'm dropping down to the daily to see, okay, so boom, what we doing? I see on my daily time frame, we already know my overall structure is being based off of, the weekly time frame. So I got to break a structure on the daily time frame. As you guys can see, higher high, higher low, higher high, higher low. This red level of resistance, this red level of support, which was my daily indecision level, that was holding me up as basically a level of support and a higher low point. Once that point was broken, which we dropped down here to a weekly level of support, I formed my first lower low. Boom. I came back up, formed the lower high. So I'm looking for sales. I'm at my first lower high point. I could pull my fibs out, pull my fibs from point A, point B. As you guys can see, we got an 88.6 retracement. My projection will be negative 27%. Going down to my 4 hour, down to the 4 hour time frame. We see structures broken again. And we just paying attention to the details. We getting into details as much as possible. We got our first higher high, higher low, higher high, higher low at this level of, this support, this red indecision level. We got to break a structure, lower low, lower high, lower low, lower high, back at a 4 hour level of resistance. And as you guys can see, we're getting rejection from that level of resistance. So where we're at currently in the market is, this happened this week. This happened last week. We got that bearish push down. We're at a level of resistance right now. So me knowing we're at a level of resistance, where we were at a level of resistance, is I'm dropping to the lower time frames because I'm trying to take entry now. I'm trying to find, the smallest confirmations in order for me to use my higher time frame analysis to my advantage for, my lower time frame. So coming down to my 1 hour time frame, I see bearish engulfing, rejection, pin bar, pin bar, pin bar, pin bar, Yeah, I have overall sellers momentum in the market. Cross the SMA, EMA, red over blue. Let's take it down to the downside. We have enough momentum in the market, even going to that 4 hour time frame, or going, we have enough momentum to easily push to 1.28946 easily. But it's a patience game. We can't rush. We can't rush the process, and when you have patience gonna take you a long way with trading.
Do you use bullish and bearish variations?
I do use bullish and various variations, but it all depends on you got to use those at that a key level of support or a key level of resistance. That's the only time I'm using them, simply because
Like a momentum.
The momentum. If you're at a level of resistance, then you get something like hold on. For instance, boom, right here. This right here, we only got like 5 minutes, so I gotta make it quick. This right here is a bearish variation. So right there at that bearish variation, I know we're at a level of resistance. So at that level of resistance, but I know at that level of resistance from the higher time frame, we are in, we're in a downtrend. So I know this is actually a lower high point on the higher time frame. If I add this candle and this candle right here, these two bearish candles together, what do I have?
A bullish and a bearish engulfing.
Got a bearish engulfing pattern. So why not take that entry? Go to the lower time frame, try and snipe something out. Come to the left, and then boom. As soon as you would have took entry on a bearish candle. You would have took entry on a bearish candle that had no wick to the downside. You would have went automatically into profit. But the only thing is, you always have to understand your risk and know your risk with taking certain setups like those. So you always make sure your risk to reward is correct. It's certain things you gotta know in order to be successful and be profitable consistently in the market. So
some trades, like, they're not even worth it.
Yeah, some trades not worth it, but that trade I would say was most definitely worth it, simply because you go to the 4 hour time frame, and at that 4 hour level of resistance, hold on. At this 4 hour level of resistance, you already had a pin bar close, you already had a bearish engulfing, you already had this confirmation right here, which showed you the market was rejecting. You had confirmation already to take that setup. You see what I'm saying?
Can't you just forget about the doji or whatever it is and put
You can't forget about that doji, but what I mentioned earlier in in this webinar, I'm gonna use this doji to my advantage because that's giving me another confirmation that the market is rejecting, pushing up. We're at a level of resistance. So with me seeing the market rejecting, going up, and I'm already looking for sales, overall momentum is bearish momentum. I'm gonna use that to my advantage to the fullest. So we would have been good. We would have been good if we would have took any type of setups like that. And just you gotta pay attention to details, understand where you're at, know where you're at in the market. So we only got like 2 more minutes. Do anybody?
Damn, I'm bullish on that.
You said what?
I'm bullish on GUC. I can keep selling that if I want to.
You're bullish on GU?
Mm-hmm.
How?
All right.
Damn, we only got like 2 more minutes. We're gonna have to send another link, bro.
Hold on.
I want to hear this.
Who calling?
Okay, we only got like 2 more minutes, so I'm gonna send a new link out, and then we could jump on. We could jump on another webinar.
Let me get on my laptop. Hold on.
All right, I'm gonna send the link to the group chat. So just jump on a new one.
All right.